man, so Jerome Powell has just rugged the crypto markets. He came out meaning business with another 75 basis point rate hike. That makes 4 in a row, which we have not seen a single 75 basis point rate hike since 1994. This is insane. He means business, and markets are not happy. We initially saw a pump in the price. You can see the green candlesticks coming out at 2 p.m. Eastern time when he came out with the rate hike decision, which, as you can see, was increasing the Fed fund rates to 3.25% to 4%. So yes, that is the 75 basis point hike that the market was expecting. As you guys know, we plotted the different scenarios that could have played out, and I said the most likely scenario, we said this before in our pre-streams, that we were going to see 75 basis points with hawkish tonality, leaving the markets 1 to 2% down. That was my most likely scenario, and that is exactly what is playing out right now. You can see here, markets are down about 0.7% here on Bitcoin. Some of the altcoins down 1 to 2%. We can see S&P is not too happy. Let's get a refresh here of how the equity markets are responding. And ultimately, Jerome Powell not only just came out with aggressive rate hike, but he came out hawkish, 2.5% down on the NASDAQ, S&P down 1.74. So relatively, crypto is holding up well. You got to remember, crypto moves more volatile than the NASDAQ. So if the NASDAQ's down 2.5 and crypto is holding up a little bit better, we take that as a win. As you can see, we were monitoring on the live stream the falls here. We had a nice run up here on Bitcoin after the announcement, up to 20,800. Since we're now sitting 20,200, we got to watch out for a few key levels, which I'm going to share with you. But before we do that, we've got to cover off some of the key themes that Jerome Powell spoke about, because this is what we need to be aware of. And the main thing that hit me with Jerome Powell was he wants to start doing two things. One, he wants to start pricing in this lag. So whenever you have monetary policy and you've been increasing rate hikes by 75 basis points, you do not get the impact immediately, right? You get it over a period of time. And by the way, I'm going to keep the charts up open as I'm speaking, because you can see the markets are still falling. These are the minute charts we've got open here, and the markets are not happy. I've just got off the live stream where we covered off the press conference, and the market's still pricing this all in. What he's saying is we need to price in that lag. So in essence, he's saying, okay, I need to see that lag come. The other thing he says is we need more ongoing rate increases. He made that very clear. He says, I've not over-tightened. He doesn't think they've over-tightened. And he says, look, even if we over-tighten, I'd rather do that. He's saying, if I over-tighten, it's fine, because we'll use our tools to fix it. In other words, I'll print again, right? If I tighten too much and hoover up all this money in the economy, and I mess up and everybody's poor and I've driven the economy into a recession, he's saying it's okay, I'll just print again. Right? But he's saying if I don't get this right and inflation doesn't come down, which, by the way, inflation is having a problem. This is inflation. It's not coming down. We saw that with the CPI reading earlier in the month. Then it's going to become a problem because you will have entrenched inflation. So at the moment, CPI is sitting at 8.2. What Jerome Powell doesn't know, think of it like a bar underneath this bar. He doesn't know how much of that is thick, entrenched inflation. Like, think of that thick, fat, right? It's not moving. He cannot do anything. It just won't be affected by the interest rate hikes. That's what he doesn't know. Is it 6%? Is it 5%? Is it 4% like in the Paul Volcker times? So this is his concern right now. He needs to go ahead. Other few things which are worrying people is that he says there's a need to focus on, he needs to focus now, not just on the rate of the rate hikes. Remember, everybody's focused on, is it 75 basis points? Is it 50 basis points? Why is nobody talking about the terminal rate? And what he's saying is, from what he's seeing, the data he's seeing, he's going to have to increase the ultimate rate level, which is also known as a terminal rate, to a higher level than previously expected. In other words, we're going to need to get to more tightening policy than we expected previously. Now remember, up till 2 meetings ago, the last two, this 75 basis points and the previous one, we were at accommodative policy and then neutral. So 2 months ago, before that 75 basis points, we were at neutral. So on net, Jerome Powell and the Fed were neither printing nor were they hoovering economy. They were not accommodative, nor were they tightening. Now, with the next 275 basis points we've just had, we are now 1.5% into the tightening cycle. So we are now in a tightening policy, and that's going to have an effect. You'll see the job market start to take effect, and we will see that. Now, interestingly, before Jerome Powell's meeting, we had the ADP jobs figure. We covered this off with our course member live streams, as we did with the different options that we're going through. And what you notice is payrolls rose more than expected. 239,000 versus 195. Now, this got people thinking, hang on, the labor market's really strong, even though Jerome Powell's increasing rates, and wages increased by 7.7%. Good. So I did a little bit of digging. And when you do a little bit of digging, what you notice is that most of the categories of jobs were falling to the downside. There were two noteworthy ones which didn't: trade and transportation, and more important, leisure and hospitality. So what we can see is there is demand destruction. We are seeing some of the rate hikes start to take effect, but there are a few areas which are skewing the data, making the labor market seem really, really strong, which is a very interesting point to note. Now, where does the focus now go? Well, the focus now goes to the next FOMC meeting, which is in 6 weeks. And this is now the one where people are seeing, are we going to get 50 base points? And that was always the agenda going into this meeting. Most of the market, we saw it, 85% of the market expected 75 base points today. Let's face it. Yes, we had a little bit of hope. Do we get 50? We were very unlikely. We said that going into the meeting. But the focus was, would he give us a clue of 50 base points in the next meeting? And the reality is he dodged that question. He was a politician. He dodged the question. He didn't cover it off. And he said we could and we couldn't. Okay. So a few different quotes for him. He goes, over time, speed becomes less important. And soon there will come a time to discuss tapering off, most likely at the next meeting. So he is saying he's going to discuss it, but he said a decision hasn't been made. We don't know. We will take into account the lag. Soft landing is still possible, but the window has narrowed. These are his words. That's what he's saying, right? And he says we haven't seen inflation meaningfully come down. What we can see is that, interestingly, and this is going to be the theme going into the next 6 weeks, 61% of the market after that press conference are pricing in that he's going to do his pivot, going to do his 50 base points, which is interesting. Now, I think this will fluctuate a lot between now and then. It's going to depend on all the data we get. We get the next CPI reading, we get non-farm payrolls on Friday, and all the other bits and pieces we get between now and December the 14th, which is quite a long way away. So, but this is it. We are getting closer. So for all of those people feeling annoyed, you have a right to be annoyed. Right? You have a right to be frustrated because we're in a market right now where there is no return to be had anywhere. Right? Bitcoin has been sideways, and that's where we're probably going to stay. We're going to stay channeled. I'm going to come onto the charts to see where we could be staying, but that's ultimately where we're going to be, is we're going to sit here sideways for a little bit longer. We need to clarify a few things here. There's a little bit of confusion in the market about what is a pivot and what is a U-turn. Let's not mix these things up. A pivot is when he changes direction. Think of somebody pivoting. So changing direction means changing the rate of his interest rate hikes. So going from 75 base points to 50 in the next meeting would be a pivot. That is not the same as a U-turn. The U-turn is what we're looking for as the big change. And a U-turn would be him stopping the rate hikes or pausing, okay, or reducing the rate hikes, so cutting the rate hikes back down again. Okay, so those are the U-turns we're looking for. So again, you're okay to be frustrated in this market. This is a difficult time. There's no returns to be had anywhere. Right now, the policy, interest rates are climbing. It's very difficult to get jobs out there. Those people know it. Yes, he's screaming that the labor market is high, but the reality is on the ground, things are difficult. Inflation is high. Cost of living is high. This is a difficult time to, be trying to build your wealth. But the reality is you've got to see the course. You've got to see the course. When fear is high, when these boring sideways markets send you for 6, when it's been like this since June, right? Let's go back. Look at this. I know it's messy, but you'll get the picture anyway. Look at this. So from here in June, it's been sideways, right? We've been in a horrible period of time, but these are the times that you're going to look back on and wish you accumulated more. I know I've made that mistake. I've been shaken out by bear markets before, right? And yes, this bear market is a little bit different because we've got this ongoing recessionary fears and we're in a tightening policy, but there will be good times again. Even if he wrecks the economy, he's going to have to print. And when he prints, Bitcoin's going to benefit from it. And so we need to see the course. We need to be seeing what we need to be doing. Now, what am I currently doing in this market? Am I currently accumulating? No. But again, that's only because I've been in the markets for a very long time and I've been managing to buy at great prices. If we see lows at 18,800 at the bottom of the channel, I'll nibble some more. I actually don't think we're going to head down to 17,600. I don't think the news was that bad that we're going to go test our lows. I think Bitcoin's held really well. Even though the NASDAQ and the S&P have tested their June lows, Bitcoin hasn't needed to. It's not gone to 17,600. Now, at some point, maybe it will, but it will need some extra bad news. What I am worried about in the near term, which I want you guys focused on, is this M pattern, which we've been harping on about for a long time. And you can call it an inverse Adam and Eve pattern because it's not really a perfect M. But either way, if we come to 20,000 now, which we're $200 away from at the time of speaking, I'm scared we're going to break down to these levels. And then you'll get opportunities to nibble here, which is personally what I'm going to be doing. Now, if you want to trade any of these moves, if you want to buy on spot, check out BYBIT and BitGet, links in the description. They're the 2 exchanges I personally use and they support the channel. So if you do want to trade anyway, do check out those links. You get some amazing bonuses to trade for free as well. So definitely claim those bonuses at the very least. So that is what I'm watching for. If you bring out the EMA ribbon, you can see an interesting thing here. You can see on the 4 hourly, we're trying to break it. Now, if you break it, that's not going to be good. We've been above it for a little while now. We've done well for the last week to be above it. We bounced off of it. We came down. We look like we're going to try bounce off of it. We're going to create some weakness. If we zoom out to the daily chart, this is where you start to see what we need to do. So let's just go into a cleaner chart here for the purposes of this daily EMA ribbon. You can see we need to get that bounce. We need to bounce off of it. We need to see some goodness over the next few days to get a bounce. Otherwise, we're just going to get thrown back to the downside by the bears and it's all going to be history. Because the reality is when you come to the weekly chart, where are we? We're nowhere near our EMA ribbon. And that's the sad thing here. We've not even on a weekly chart been able to get close to our EMA ribbon. Close to your EMA ribbon is 23,000, 24,000, working in through here into the 27,000. Even at this point, the bears will be in control, but we're not even getting there. We're like getting weakness in this level. And that's part of the tightening process. That's what happens when monetary policy is tightening. We're not accommodative. People don't have loads of cash being thrown out into the markets. That's something we need to be aware of right now. People are chasing yields. But one thing to be aware of is there is cash on the sidelines. Yes, there's no new cash being printed, but people are sat on cash and they've not allocated it yet. That's what all the big investors are doing. They're waiting to see where can they get a return, because the reality is right now, the only place you're getting a real return is the US 10-year, which has just climbed back above 4%. So it's bouncing off of its EMA ribbon here, and it's going to try to post a higher high above $4.30, which is 4.3%, sorry, which is huge, right? For risk-free to be getting that kind of money, big institutions will be putting their money there. But that's irrelevant for retail traders like us, right? Unless you've got millions to put into these bonds, who wants 4%? Right? If you've got 100K even, 4% is $4,000 per annum. It's not going to change your life, right? So if you're looking to build wealth, you've got to be dollar cost averaging in. You've got to be building your portfolio, waiting for the next bull cycle and being patient. And what you don't realize is this is a blessing that you're accumulating in a bear market. From a theoretical point of view, when else would you want to accumulate? Do you want to accumulate during a bull and then sit on 90% down portfolios? A lot of you guys have done that as well. If you're new to the market, what a great time. Did buy at those highs at 69,000. What a great time to be dollar cost averaging in and bringing down your cost basis. There you have it. Hope you guys enjoyed this summary. If you appreciate this type of content, smash up the likes and subscribe. Jerome Powell coming and hitting us for 6, and we can't say we didn't expect it. I would have wished he was a little bit more dovish, a little bit more softer, given he's just done 4 75 basis point rate hikes in a row. He left no room. He wanted to be the man of the people. He didn't care about the stock market today. He did not care about investors in crypto. He wanted to be the man of the people going into the midterms. He wanted to say, you know what? I feel your pain at the fuel pump stations. I feel your pain with goods and services still at all-time highs. I'm going to bring inflation down, and I'm not going to damage the job market. I'm going to try to do a landing still. Even though he probably knows in his heart there is no soft landing on, and we're still in a rough period. Hope you guys enjoyed this content. Smash up likes and subscribe. Don't forget to go watch this video here, and I'll see you in the next one.